Okay, good day everyone. So today in this video we're going to be doing a technical analysis on the GBP USD. The GBP, the British pound and the USD dollar pair has been a very important and I love this pair so much because it's very volatile and very easy to trade with. So you can easily understand the market from the movement. So we're going to head down to the video on how to do a technical analysis on a pair. So first of all, you start by finding your time frame. So you need a time frame. You choose a time frame based on your trading style and goals. So when I do an analysis, I usually start from the monthly time frame to get the overview of the market, because once you understand the overview of the market, once you understand the general movement of the market, you'll be able to predict the direction at which the market is going to move in. You understand that? Okay, so we'll start with the sorry, this is the network interrupting, but wait, will be back on very soon. So as you can see in the monthly chart, you can see that GBP USD has been trending upwards for some time now. As you can see in the monthly chart, it has been okay. The monthly chart has been bearish, but it seems like it wants to hit a resistance zone at the top. But this is what the monthly chart looks like. Now you use the monthly chart to just like understand the movement of the market. So you go down to the daily chart, or you first head down to the weekly chart before you go down to the daily chart, so you can understand where the market is headed to. So let's go down to the weekly chart. As you can see in the weekly chart, the weekly chart looks okay. Let's make this a full screen so that we can have a real view of the chart. As you can see, the weekly chart looks bearish. It looks bearish because now how do I identify a bearish chart? Identify a bearish chart by looking at the trend of the market. So as you can see, this, okay, let me get my tool. Okay, so as you can see, this is a high, and this is a lower 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 high. So it means that the market has been forming lower highs, which means that it is a bearish market in the weekly chart. So it has made a lower high here, it has made a lower high, here, and a lower high here, and another one right here at the 1.3078 level. So we are kind of expecting a downtrend in this market. We'll go further to analyze the candle wicks to know the direction of the candle wicks. So as you can see, the candle wicks isn't really explaining much. So we'll go down to the daily chart. So as you can see, the daily chart just hit my simple moving average, and from this you could tell that the market could be retracing. So you basically use all this time frame to know the particular chart you'll be trading in. So let's still go down to the 2 hours chart to see what the chart what the market is, what the movement is. So if the market has been ranging for some time here in this zone, as you can see, it went up, and came down here, it went back up, it came down here, and it formed, okay, it went back up, and it formed a double bottom here, which rallied the price upwards. So we could be expecting a downtrend from here, but we won't be so sure yet. We just want to use this to understand the movement of the market. So after selecting your time frame, you study the price charts. You use candlestick, bar or line chart to visualize price movement. Candlestick charts are commonly preferred for detailed analysis. So I mostly use this candlestick chart. I don't use any other charts other than the candlestick chart because it's very easy to interpret and to understand. So we will be heading over to identifying trends in the market. So in order to determine the trend direction, upward, downward, or sideways, you have to look at the consecutive highs and lows. Trend help inform trading decisions. So as you can see, in this particular market, let's go over to the daily time frame, because I mostly like to use daily time frame because it is more accurate. So as you can see, this trend, this is a bearish trend. As you can see, it's a bearish trend. So it's a bearish trend. So you need to identify your trend to know the direction the market will be headed to. So there is that. My trend direction is bearish. Okay. So the next other thing you have to do as a technical analysis is to identify the support and resistance levels. So in this chart, we're going to identify the support and resistance level. We have to locate the key support levels and the resistance levels. This acts as barrier where price might reverse or break through. So we need to identify those support levels. So we're going to draw our support levels now so that we can know the direction of the market. So in daily chart, there's just one major support level. There are two major support levels for the bearish chart. So the first major support level is at this zone. Well, the price is obviously still far away from this zone, but with this is a support level. Then the next support level is by this zone. I'm going to zoom in now so you can see the support level clearly. So this is the support level. So we expect that whenever price falls down to this zone, okay, well, for those of you that don't really understand what support and resistance level is, support level is the place at which once the price falls down to, it will act as a resistance to the price. So when the market is trending in a downward direction, as it is going now, the market has severally bounced back after hitting this zone. So it first broke through this zone, then hit this support level, went back up, hit the support level again, and went back up to the top. And now we're expecting the price. We expect that when the price reaches this support level again, it would also act as a support level to push the price further up. So this zone, we call this zone the support zone. This is the support zone. Okay. So I see there's so many tools to use here too for your trading. So I basically like to use all these tools because they help me understand the direction of the market. So this is our support zone. So this is our support zone. Yeah, so we've identified our support zone now in this chart. So let us identify our resistance zone. So a resistance zone or a support zone is a zone at which the price would have hit that particular range about 2 or 3 times, 2, 3 or 4 or more times, and once those zones once the price hits those zones and it retraces or it makes some reverse, it means that it respected those zones. So in this particular, we're going to find the resistance zones. So I believe this is a resistance zone. So we don't want it to be the same color with we don't want this to be the same color with the support zone, so we'll give it a green color. Okay, so this is the resistance zone. So this zone right here, the price went up from this zone up to here and retraced back to this support zone and went back up. So as you can see, the price have gone up to that zone severally before it eventually broke off, and after it broke through this resistance zone, it also formed another resistance there. So we expect that this zone is this green zone is a very important resistance zone since the price is currently below that green zone. So this zone, will identify it as our support zone. So I'm gonna write that down. So this is our resistance zone. Then our next resistance zone should be up here, but the price is obviously still far away from here. So this doesn't really count for now because we don't really need it. So this is another resistance zone. I'm gonna write that out. This is another resistance zone. So as you can see, we made it very easy to understand so that you can know those zones that are important in the market. So we'll break down to the lower time frame to identify more resistance and support zones, because some support zones are not very clear on the daily chart. You have to go down to maybe like 4-hour chart or the 2-hour chart to identify more support and resistance zones that also impact the market. So let's go down to the 4-hour zone. So as you can see, the market. So as you can see, the market has, okay, we can identify this zone as a support zone too. This zone is a support zone because the price have hit this zone severally and bounce back up. So I'm going to paint this to the usual red color, and I'm going to explain to you why this is a support zone. So you can see the price went down to this zone and it bounced off. It broke through this zone quite alright. Well, I'm coming back to that. Then it went back up to this zone. Then we'll notice that before it went back up to that zone, it came back down to this zone severally and bounced off. So it means that this was a mini support zone. Okay, before it went back up here. Then it rallied back down to this support zone again and made two double bottom here before the price went back up. So this is, we can identify this as a support zone. So let's clear this shot. Okay, so I'm gonna identify this as my support zone. Yeah, so this is my support zone. So we're going to identify another support zone which is below here. So we expect that this zone would also act as a support zone in case this doesn't hold the price. So once the price falls down to this zone, it will definitely hold it and push back up. So we identify this as a support zone too. Then, okay, let me fill in. So I've identified my support zone in the lower time frame. We can break the time frame lower so that you can have a much deeper understanding about these zones. So as you can see, this is my first support zone and this is my second support zone in the lower time frame. So let us identify our resistance zones. So our resistance zone, we would assume that, not assume, we know that the price hit this zone severally. They hit it first and second time, so we expect that there might be another hit at this zone. So we expect that this is a resistance zone. I'm gonna give this a green color. So this is a resistance zone. Now we're gonna identify more lower time frame resistance zones. So the other resistance zone should be here. So as you can see, we've identified the resistance zone. Okay, we're gonna identify the other one as a resistance zone too. So we have successfully identified our support and resistance zones. So we expect that when price moves down to all these places, we expect a shift in the price. We expect a shift in the movement of the price, the movement of the market. So the support zone has been identified. So currently the market, the GBP USD pair is trading at 1.21726. So we've identified our support and resistance levels. So let us lock in all these levels to make sure that it does not have any, to make sure that it is not interfered with while I'm doing other analysis. Okay, so this has been done. So our resistance zones and our support zone has been formed. So this is it. Now we're going to move down to also using technical indicators. But me, I'm not a very huge fan of technical indicators, mostly because those technical indicators they give information based on the past movement of the market, not the current or the future movement of the market. That is why I don't solely depend my analysis on the indicators. So I prefer that I trade with my conviction to the market and my analysis on the market than solely depending on indicators. But despite all of that, I still use the indicators because they also help me to get some information about the market. But I don't solely depend my strategy on an indicator. So you can always apply indicators like moving averages, relative strength index (RSI), moving average conversion divergence. That is the MACD indicator, or the Stochastic Oscillator to identify potential entry or exit point. So I'm going to show you some of these pairs. I'm going to show you some of these indicators so that you can get used to them. Okay, so these are the indicators. There are different types of indicators on here. So in today's video, I'm going to just show you the RSI. Okay, check this out. Okay, you have to be on a trial to do that, to use those indicators, but I don't really use them. So when you subscribe for the trading view premium, you'll be able to access some very sophisticated indicators that will help your trading journey. So we'll go down to the chart patterns. So you have to recognize chart patterns such as triangles, flags, or heads and shoulders. These patterns can signal potential price movement. So we have to identify chart patterns. Now I will still make a video separately explaining the chart patterns and how you can implement them in your trading strategy. But for now I'm going to show you some few chart patterns that you'll be able to use to trade. So as you can see, in this particular zone here, the market came down from here to this zone, went back to this zone, came down to this zone, went back up to this zone, came back to this zone one more time, then went back up. So what do you see here? This particular pattern indicates that the market formed a heads and inverse head and shoulder pattern. So this is the first shoulder, this is the second shoulder, and this is the head. So I'm gonna write that down for people understanding. So as you can see in this particular zone, I explained it to you already. So the price formed a shoulder, a heads and shoulder, an inverse head and shoulder pattern. It formed it down here. The price formed that inverse head and shoulder pattern here. So this is a chart pattern too. So once you understand this, so if you were already on a trade and you saw this first shoulder, you first saw the head form and you saw the second shoulder form, you just have to enter a long position from here. I'll show you how you do that. You have to enter a long position from here after it formed, because it first formed the first shoulder and retraced and it made a second confirmation of the shoulder pattern before the price went back up. So I'm gonna set a risk. So as you can see, you have safely made your profit from here. So I'm gonna still go deeper on all these short patterns so that you guys can understand, have a deeper knowledge about the heads and shoulder pattern, and also some other patterns too that are formed in the market. So I'll show you a few other patterns before we go ahead to the next course of the video. So you have to also understand what we call the double top pattern. So I believe that the double top pattern was formed at these two zones here. The double top pattern was formed here and here before it retraced a little, then went back up. So there are always different patterns in the market. There was also a double bottom here. There was also a double bottom here. As you can see, the price went from here to here, came back down, went up here, formed the first bottom. It formed the first bottom here, went back up, and formed the second bottom here before it went back up again. So this could have been a decent trade if that you have identified the bottom of this. So then I'll just write this out for reference sake. So as you can see, it formed a double bottom here. So this is clearly the first bottom and this is the second bottom. So the way you could have traded this particular zone was to enter a long after the second bottom was formed at this zone with a risk to reward ratio of 1:2. So this is it. So as you can see, it clearly hit the take profit zone, and you would have made a profit once you understood what short patterns are. So make sure to subscribe to my YouTube channel because I'll be explaining a lot about short patterns and the different ways these patterns, the different ways you can make profit using these patterns. So there is that. Then we'll go over to the Fibonacci retracement. So Fibonacci retracement level has been a level that I've been using for years of my trading, because I've been trading for about 5 years now. So Fibonacci retracement level has been an important part of my technical analysis. So we use the Fibonacci retracement level to identify potential retracement levels after a price movement. This helps identify areas of potential support or resistance. So I'm going to show you what the Fibonacci retracement level looks like. I'm going to clear this out so that it won't be so much confusing. Yeah, I believe you guys have gotten the point already about the resistance and support zones. So I'm going to plot my Fibonacci retracement. So there are two ways to plot a Fibonacci retracement level, and the first way is to plot it in a bearish direction or to plot it in a bullish direction. So the direction you plot it will depend on your direction, the direction you have of the market. So since this market is trending in a downward direction, I'm going to plot a broad Fibonacci retracement level. A Fibonacci retracement level down. So this is the way we do it. We just go to this zone. So this is the Fibonacci retracement level. So I'm going to plot a bearish Fibonacci retracement level. So I go up to the highest high, and I plot the level from there down to my lowest low. So as you can see, you see why the Fibonacci retracement level is a very important level, and it's very important that every trader include it in your trading strategy. So I'm going to show you why now. So as you can see, these are the different levels of the Fibonacci this is the 0.00% level, this is the 23.6% level, this is the 38.2% level, this is the 50% level, 61.8% level, 78.6% level, then 100% level. So you will see that when the price fell from here to this zone, it fell and it respected this first level because the price retraced to that first level before it went back down and formed a double bottom here, then went back up again, then came back to this other level. This is the 50% level, and went back up before it clearly broke through the 50% level, then went down. Then it also respected this level. So this is the level, it respected the level, then before it went back down to this zone. You understand? So it also respected this level after it hit the 0.00% level. It went back up to the 23.60% level. As you can see, it clearly respected that level and went down again. So as you can see, using a Fibonacci retracement level will help you understand the market perfectly. So there are different ways to draw it. You can also draw it on a smaller time frame so that you can also get the overview of the market in a smaller perspective. So I'm going to draw my bearish Fibonacci retracement level from this top zone down to this lower low, down to this lowest low. This is the lowest low in the market. So yes, so as you can see, the Fibonacci level, it respected this level, came down to this level, went back up, it respected this first level, respected this other level too, went back up to this level. It also respected this 23.80 level, but we are past that now. It respected this level too, the 50% level, and before it went back up to this level, then came back down. You see how it clearly respects each and every one of these levels. It shows you that the Fibonacci retracement level, you can use it to plot the direction that you want you can use it to plot and identify the prices at which you enter from. So as you can see, it respects each of these levels also. It respects each of them clearly. So we're expecting that if the 50% level don't hold this price much longer, if you break through it, we expect that the next level of support will be at this, the next level of resistance will be at this 61.8% level. But if it breaks below this 50% level, then the next support level will be at 38.20 level, which is the 1.21517 level. So there is that. Now to plot a bullish Fibonacci retracement level, you can do that by going down to this zone, the lowest level, and plotting your chart upwards to the highest level. So as you can see, the price also respects all these zones too. As you can see, it respects these zones. It respects all these zones, all these levels it respects all of them. Here you see, the price respects all these levels. So you can always use the Fibonacci retracement tool to understand the price movement and to see how the price react when it hit each of these levels. So there is that for the Fibonacci retracement. So we also come down to the volume analysis. Analyzing trading volume to confirm trend. Volume spikes often accompany significant price movement. So it is important that you have a volume. So it's important that you analyze your trading volume of whatever market pair that you're trading, and you can always do that by you also put the volume indicator, 24 hours volume, to understand the direction of the market. So, but I will explain more about this volume analysis on a next video because this video is taking up so much time already. So I'm going to explain more about the volume on another video. So just make sure to subscribe to my YouTube channel because I'll be making a lot of videos explaining and coaching and teaching people how to trade and do technical analysis, and I will still do a fundamental analysis video too. So just make sure that you follow my YouTube channel and subscribe to my YouTube channel because there will be a lot of trading videos that I will be uploading very soon. So you also combine indicators. Avoid relying on a single indicator. Combine multiple indicators. Combining multiple indicators can provide a more robust signal. So whenever you're trading, make sure you don't always use one trading indicator. So make sure you use several trading indicators as they will help you to understand the real movement of the market. You can use your RSI, you can use your moving averages, your Stochastic Oscillator, different indicators. There are so many indicators available in the TradingView app, so you can subscribe to the premium of them and check out all these indicators too, and the strategies indicators too. So there is that. Make sure you don't rely on just one indicator because one indicator can disappoint you in the market, but combining it with different other indicators will yield you more results. Then the last but not the least technical analysis that I will also be giving you guys is the risk management. Make sure to set stop loss and take profit levels based on your risk tolerance. This helps manage potential losses and gain. So make sure that whenever you're trading, that you make sure that you use your stop loss, you place stop loss levels, and you make sure that you also place take profit levels to manage your potential losses and gains too. Remember, technical analysis is just one aspect of trading. Consider combining it with fundamental analysis and always stay informed about economic events that can impact currency prices. So with this, I'm going to end this video now. Because it has taken so much time already. I'm going to head to my MetaTrader 4 to place some trades, because this market looks like it's gonna come down, so I might place a sell order here, but I just have to allow the market to play out completely so that I will know the order I want to place. So there is that.